Good morning, traders, and welcome to BCR's morning market outlook. First up, let's look at the US dollar. The DXY climbed above 100.3, reaching its highest level since March after the Federal Reserve left interest rates unchanged but delivered a more hawkish message than markets expected. Around half of FOMC members now expect at least one rate hike this year, while inflation forecasts were revised sharply higher. Markets have fully priced in a 25 basis point rate hike before year end. Technically, the dollar index has pushed above the psychological $100 level. Resistance is seen at 100.64, followed by 101. On the downside, the 100 point psychological level remains key, the key support level, with further support around 99.49 if selling pressure returns. Next up, let's have a look at crude oil. WTI opened the week sharply lower, falling more than 4% after the US-Iran MOU was finalized ahead of its expected signing on June 19th. Prices briefly touched a near two-month low around 79.25 before stabilizing near 79.65. The market has rapidly unwound the geopolitical risk premium that supported prices during the Middle East conflict. Additional pressure came after Goldman Sachs lowered its 2027 Brent crude forecast, and OPEC reduced its 2026 demand growth forecast. From a technical perspective, the previous conflict-driven uptrend has now reversed. The key $80 level is the key support zone, with further downside support at 78.88 and 75. Resistance is seen around $82, and the 100-day moving average near 85.4. Next up, let's have a look at gold. Gold opened more than 2% higher during Asian trading, briefly rising above 43.45 before easing back towards 43.10. The metal was supported by softer rate hike expectations following the completion of the US-Iran MOU. Markets are still pricing a 57% probability of a US rate hike before December, while attention now turns to this week's Federal Reserve meeting. Technically, support is located around 42.62, followed by stronger support around the key psychological level of $4,000. Resistance is seen at $4,400 and the 20-day moving average at 44.14. Lastly, let's have a look at the Australian dollar, which rose marginally above 70 cents as risk sentiment improved following the US-Iran peace agreement. The weaker US dollar and stronger market sentiment provided support for the Australian dollar. Markets have significantly reduced expectations for further RBA tightening, with the probability of an August rate hike falling to around 35%. Technically, the Australian dollar remains in a consolidation phase. Resistance is seen at the psychological level of 71 cents. Support is around the 70 cent level, and the 150-day moving average at 69.40.